Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. I'm Phil Carroll and it's Sunday the 22nd of January. And already it's like, where has that month gone? Has it gone, Kev?
Don't know. Just the last few days, I don't know, because I've been coughing a lot. But other than that...
You picked up one of these persistent coughs that everybody seems to have at the moment.
No, it's not really been persistent. I just got it on, I think, Sunday or Monday, and been coughing most of the week. I had one bad night, but other than that, I was okay.
Been on the old nebulizer then?
Yeah, trying to make sure my lungs are still working. All good.
Well, it's always a good start to the day, isn't it? Check you're still breathing.
Yeah. Well, if you wake up, you're still breathing, obviously, so that's always good.
Yeah.
Yeah, and I don't know, this week's been a bit of not much has happened, really, I think, in the markets. The markets seem to have be calmed, if you like.
Yeah, there's a bit more volume coming back into certain things, isn't there? We've seen some stocks moving 50, 60, 70, even more. Some of them done 100%, 200%. There was an offer for Serafin this week, where it saw the stock move about 250% on open because there was a 30p offer. But yeah, I think that there is definitely some sentiment coming back in, but certain not anywhere like we saw in the kind of the COVID casino days of sort of early 2020 though. But yeah, I think we'll get there. I think the latter part of this year could be quite promising.
Yeah, I hope so. And I mean, I think it's squaring up to be one of those things that we all talk about in the future, where it's commodities. I really do think there's going to be a rush for commodities over the next period of time, but we will see. I mean, there's obviously still businesses, and the businesses are still making money, so it's a case of how are they being fairly or unfairly valued.
Yeah, I mean, all of the trading updates that I've seen certainly for November and December for a lot of these big companies, supermarkets and retail, have actually been very positive in terms of not only revenues, but actual profits are up. So they're obviously doing something right. Now, whether the British public have indebted themselves, the stories of people borrowing that much for this Christmas that they're going to be paying it back for like literally years, that's a worrying sign. So how much of that was borrowed credit or was credit? But it certainly seems like it was a good Christmas or a good last quarter for retail.
Yeah, or just not paying it back.
Yeah, or not paying it back. There was some good news this week in terms of, let's say, the technology space. There was two bits of news that were quite interesting. The first one was related to a gentleman called Andrew Forrest, and we've actually mentioned him on the show before because he's actually one of the large investors in Greatland Gold. He owns Wyloo Metals. He's also he's the founder of the mining firm Fortescue. Now, if you know Fortescue, they're a very, very large mining company listed on the Australian Stock Exchange, and their value is something circa 70 billion Oz dollars. So that they're not a small mining company. And basically, this gentleman Andrew Forrest has set up a company in the UK, which is called WAE Technologies, which is actually part of the Williams Formula One team. So what he's seen that the technology that they're going to be putting into these Formula E cars, these EVs, they need, what we said it before, haven't we? They need a source for these EV metals, don't they? So what has he done? He owns Fortescue, so he's gone and bought a car company, effectively. Obviously, Williams being one of the most prestigious of the Formula One teams out there, certainly will have been in the past. Probably not so much, not as prevalent now. And basically, he's going to be setting up this battery plant in Oxfordshire. It's only down the road from me in Kidlington, and they're going to be building these EV batteries as part of the Gigafactory. So that was welcome news. But the irony is that this news comes 24 hours after the announcement that British Volt, they were touted as a flagship UK electric car battery company, they went into administration. Did you see that news? I mean,
I saw both bits of news, and both were interesting in their own right. Firstly, the Australian thing in Oxford. Basically, he's targeting to put batteries into major vehicles, so not cars, whether it be trucks, trains, all of that type of stuff, and effectively to create a fleet of vehicles, electric vehicles for mining, because that's basically what he wants to do. So for me, yes, this is just another scenario where the miner ends up buying what he needs. And, I don't see that will not be any, or I think it will be no different for people who need the other elements. They're going to secure their supply chain. If they need graphite, go and buy a graphite miner. If you need nickel, go and buy a nickel miner. If you need copper, you're going to, either buy it or at least have, the fact that you're going to get the supply from them guaranteed. So, and the British Vault thing obviously just overstretched themselves, and British government not willing to step in.
I'm going to say, I mean, what do you think the rationale was behind for them? I mean, obviously, considering they probably stretched the funds to the point where they don't have as much money now for investments in, in this space, considering the current climate, do you think that was an oversight to not allow? Give funding to this plant in Northumberland in Blythe, which was going to be one of the big. It was a planned gigafactory. I mean, they were bailed out, weren't they? They received something to the tune of about 70,000, which was probably nowhere near enough, or 700,000 from Glencore, who that was one of their sort of last rescue deals. But obviously that wasn't enough, and it's going to be, that's it now. It's into administration. It's a blow, really, isn't it? Considering that they reckon that, we need a combined capacity of something like 57 gigawatt hours by 2030. I don't think we're going to hit that target.
Well, it'll probably go into administration, and the Chinese will buy it, and it'll come out, and it'll be owned by the Chinese in the UK. So, or it'll be owned by a foreign entity within the UK, almost certainly. So, I don't know. I think the government, damned if they do, damned if they don't, sort of thing. In that particular situation, I would have hoped they've given it some consideration and realised, no, they can't. Put the taxpayers' money in there. But considering what we're trying to achieve, it's a shame, that's for sure. And we've got all sorts of different issues, isn't it? I mean, there's funding there for Alchemy Capital as well, is it? That's required up in Northumberland as well, I think is where it's based. So there are many different projects that are required to make this EV thing, and it's going to cost billions, if not trillions of dollars to make all this happen. And you still need all of the mining stuff, or all of the minerals, if you like, that are required. And all of those things need to come from closer to home. If we're going to have these things, we're going to need them in Europe. There was an article I read this week about the gold prices and the fact that actually the gold price is broken out in many different areas. It's broken out against the euro, it's broken out against the British pound, it's broken out against the Chinese yuan, is it? But yeah, against the US dollar, not quite yet, because the US dollar is artificially high. I mean, it still is sort of around that 101, 102 scenario, but to have the supply of these things within Europe is going to be important. So do you know anybody who could supply some of those things? Well,
yeah. I mean, we've got someone, as you say, much closer to home. We welcome today Professor Richard Conroy of Conroy Gold and Natural Resources. Welcome, Richard. How's things?
Things are very good indeed. Good to talk with you. Look forward to doing so.
Yeah. So it's great to see you again. It's been a couple of months. We're going to wind back a little bit, take a step back, and have a reminder what Conroy Gold is all about. Do you want to take us through the story, Richard?
Well, very briefly, we in our history, as it were, of management have always aimed to make a major economic discovery. And we've been very fortunate in doing so. And now our latest is the entire new gold district that we've discovered in Ireland. And the fact that we now have in a partner with the finances to develop it. And the finances will be large. We're not just talking about a single gold mine here. We're probably talking about a series of them. So it's a very major project. It's taken an awful long time, a lot of blood, sweat and tears, but it's a very pleasant feeling to be where we are at this present moment. Share price doesn't reflect it, but that's going to change. So that's the situation of the present. We're extremely happy. The joint venture is underway over the past year. It's been obviously a learning curve for both parties, but it's come together very well indeed, and was looking forward very much to a pretty active coming year. as we proceed with the exploration and development of this entire district. It won't be just Clontibret alone, it'll be a lot of the rest of the area as well. And of course, there are a whole series of other gold targets in it. Most people don't even begin to realize the sheer magnitude of what we're looking at over the 300 square miles that are now under our license control.
So tell us, Richard, a little bit about how DeMere came into the picture and a little bit about them.
DeMere came into the picture when they approached us. They had actually met us at one stage, at least one of their individuals reminded me that they had in PDAC, the International Mining Conference in Toronto some years back. And indeed, at the last conference there, which was the beginning of March, just before the COVID hit, we had, of course, reached this stage where we were looking for a major partner to come in, and a number of companies approached us then, and indeed some of them had been talking to us for some years. But with COVID, a series of site visits by various majors just didn't happen. Some of them just couldn't come. Some of them were marooned here, there, and everywhere. But in the midst of this, DeMere came along. There had already been one other group from that part of the world had been talking with, but DeMere came along, and DeMere, of course, although not very well known in the mining industry or indeed outside it, they are a mining company with a series of quite large mines from base metals right through to gold in Turkey. And they are owned by one of the wealthiest families in the world, the Koç family, which controls Koç Holdings in Turkey, which is Turkey's largest public industrial company. It employs over 90,000 people. It has a variety of interests ranging from owning various banks, I think 2 banks, various manufacturing entities, various other enterprises. These include such things as, shall we say, manufacturing vehicles in partnership with Ford Motor Company. So they're a very major organization. However, the DeMere export part is mining company, which certainly utilizes the facilities and backup, which comes from DeMere Holdings, but is in fact a private company, private mining company owned by the Koç family. And they wish to expand outside Turkey. They've reached a stage in which they have the sort of technological expertise, and of course they have great resources of funds. So they're very, very good partners for us to line up with for the development of a gold district. And I don't think people fully take it on board, or certainly the market doesn't, that we've discovered an entire gold district. We haven't just discovered a gold deposit. We've got an entire district. And such discoveries are fairly unusual in themselves, fairly rare in themselves, and it's certainly extremely unusual to have one small company, and we're still a very small company, which controls the entire 300 square miles of a gold trend with many targets along it. And it suited us very well to have the DeMere people, because they have financial resources, enormous financial resources, and yet at the same time, they're starting to expand. Whereas many of the major gold companies, and we've talked with many of them, and good relationships with many of them, but they have many other interests in South America, in Africa, and wherever. And you have to take your place, as it were, in the queue. Though, mind you, I think many of them would push us pretty high up in the queue. But nonetheless, you're still part of a joint venture with a company which has many other mining interests. With DeMere, we are their mining interest outside Turkey, their first major joint venture enterprise. So this has very considerable advantages for us, and no doubt for them as well.
So tell us about the financial details then of the joint venture that's been agreed.
The financial details of the joint venture are extremely good. First of all, it's an earn-in, so they have to spend very substantial multi-million pounds of money in order to earn an option to come into the projects. And that starts with, first of all, a down payment of 1 million, which they've already made, and that's followed up by a minimum expenditure of 4.5 million, plus any expenditures required under the requirements of the respective governments in Northern Ireland and Southern Ireland, minimum regulatory work commitments on all of the licenses. So it's not just 4.5 million, larger than that is, it's 4.5 million plus, probably run out round about, I would guess, 5 million for the first phase. And that first phase gives them 25% of a given project. Let's say it's Clontibret, they have 25% of Clontibret. It doesn't give them 25% of the entire area or anything like that. It gives them 25% of that given project. And then if they wish to increase up to 40%, they have to spend a minimum of another 4.5 million plus all the requirements under the government regulations. So let's call it another approximately 5 million. So that's 10 million. That still doesn't give them a majority shareholding. We still retain the majority, but they can now come up to 40% in the given project. Let us say again Clontibret, but it might equally well be Clay Lake or whatever. And now, if they wish to gain a majority interest, which would be 57.5%, leaving us with 42.5%, still a very large holding for us, they have to spend whatever it takes in order to bring the project through feasibility studies, through planning permission, through a mining permit. So in other words, it has to be brought to construction-ready status. So you're looking at pretty serious amounts of money being spent by them to bring them to a majority shareholding in one of the projects. If we start to do the same thing, let's say, with Clay Lake, again, they'll have a fairly heavy expenditure at that stage, mainly in relation to planning and mine development permission. So we will still retain, of course, over 40%. And that we can now start paying our way on it. And at the moment, of course, all the financial expenditure, unless we choose to spend some money for some reason or other of our own accord on something we think should be done, all the financial expenditure is carried by the joint venture partner. That's the way in which they're earning in an option on it. They also have been very helpful in technological support and so on, but their obligation is financial, and the reward is a percentage shareholding from that financial expenditure. We, at the 40% stage, have the option. That's when we've now got actual planning permission and government permitting permission to go ahead and construct a mine. And we at that stage can say, right, we will raise whatever funds are required or spend whatever expenditure is required to retain that 40%. Or we have a whole series of other options, including one, for example, in which we would be carried for the expenditure and paid back out of the mining revenue. Another in which we would have a net smelter royalty. It is, in industry standards, a very, very good deal indeed. Most small companies such as ours would probably consider themselves pretty lucky if they're able to hold on to somewhere around about 10-15%, and many of them will be very lucky to hold on to 5%. We're in a totally different and very major position. And it's not only that, but when I talk about people holding on to 10 or 15%, that's usually in relation to a particular deposit, let's say the Clontibret deposit. And there's nothing beyond that. Whereas in our situation, of course, because we have discovered the entire district and have it licensed to the company, all of the other potential mine deposits also come under the same arrangement. So it is a very major deal indeed. It's going to be a very long term, and it's going to be a very large return could come from it. One can't speculate as to the results of exploration, but they're looking pretty good.
So, Professor Conroy, the 10 million plus and let's just use Clontibret as an example, to get Clontibret to mine ready status, that 10 million has to be written off by DMIA, or they will recoup that money through the mine and you will have to pay that part as well, or not?
No, we don't have to pay any part of that. All the heavy expenditure from now right through to having mining permission to go ahead to the construction stage is entirely on the part of the joint venture partner. That's how they earn in. And they're doing very well. Many of the other large companies would have been very interested in coming into an entire new gold mining district. So they're doing well, but they are paying a lot for it. But on the other hand, they have very substantial financial assets, is one of the reasons which we find them attractive to us, that they're in a position to fund whatever is required, and that they're anxious to get ahead with it straight away.
So just so everybody's clear, then DMIR are going to have to pay 10 to probably closer to 15 million euros, more than likely.
Probably closer to 20, but something in that order of 15.
Going to have to pay 20 million euros to get Clontibret to be mine-ready situation. And they're willing to do that because they see the opportunity in Clontibret. And yet your market capitalization is £6.5 million. I'm struggling to get my head around it because it's bizarre.
Yeah, that is the way it is, and that is only for the Clontibret part. If we decide to go ahead with Clay Lake, which is much larger than Clontibret, certainly in its surface indications, then in that case, again, they have to spend whatever is required in order to gain planning permission and a mining permit. And these are expensive procedures. You don't go through a planning permission for a mine at no cost. You have all the technical costs, you have all the legal costs, you have a great deal of expenditure. So that's why I say it's probably going to cost, for the first one, 15 to 20 million. After that, possibly be only 5 to 10 million for that particular portion.
Yeah. So when DMIR Export invested initially, it was done directly into 3 operating companies from memory. They were obviously wholly owned subsidiaries of Conroy Gold, but then there was another 3 new prospecting licenses in the Longford Down Massif that were granted to Conroy, and I think there was an intention to transfer those licenses into the joint venture. Is there any update on how things are progressing there?
Yes, that is well on its way. In order to be able to transfer them, you have to fulfill your commitments on the first 2 years of the license. That has now been done. Reports will be going into the department in relation to the work that has been done. And if they're satisfied with it, which I'm sure they will be, then they accept that we have completed our commitment for the first 2 years of the license. And when you do that, but not before, when you do that, then you're entitled to bring in a joint venture, to apply to bring in a joint venture partner. And that's when we will transfer those 3 licenses across to the appropriate subsidiary company. I think it'll be Conroy Gold, Longford Down.
Yeah, and that'll make a total of 15 licenses, correct, which are then held by the joint venture. So, I mean, looking at progress to date, there's probably a lot of people who get quite apathetic about these things because they don't realize how long this drilling program takes. Yes. I think it'd be safe to say that you excellent results have been achieved to date. Are you happy with the results that you've seen so far, Richard?
We're very happy with the results, and indeed, now we anticipated that they would be positive, but we're still very happy when you actually put down the drill hole and you get back the record of gold in the bedrock and where you expected it to be. No, the results are very, very good, and we'll now be, I would anticipate, expanding this considerably, because it's not only Clontibret. We will, now that the funds are available from our joint venture partner, I'm quite sure be expanding out. At the same time, as we're getting on with Clontibret, we'll be expanding out to look at other areas within the district. We've already ourselves done a lot of the preliminary work, but now we can begin to do it in a manner to see, well, what are the size of the deposits in other areas. So it's a tremendous situation to be in. We obviously still have to pay our own internal overheads and matters of that nature, sure, and the obligatory fees that you pay to the stock exchange and so on. But the very major expenditure is now totally covered by the joint venture partner, unless we decide to do something or see some other opportunity or whatever it may be. But moving forward, we're in a very different position from the situation in which, as a junior explorer, you not only had to pay all the expenditures involved in running a company, but as well as that, you had to try and raise funds for exploration. Now we're in the very happy position that not only the funds for exploration, but the funds for development are available through the joint venture partner to us, and that we will retain a very major share. So it really is an excellent deal. I must say, I'm talking with people at PDAC now that PDAC has reopened. They thought it was one of the best deals that they had heard of in the industry. It's a very good deal indeed.
Yeah, it certainly sounds it. So with the latest news that came out with some drilling demonstrates extension of Clontibret deposit. Obviously, you've moved. The first drill hole was located about 270 meters from the previous drilling that was announced on the 6th of October. Are you happy with the mineralization that was intersected in that stock work? On those different drill holes.
Very, very, very happy with it indeed. The stockwork is a diffuse sort of mineralization. The higher grades that you look for are located in what are known as the lodes. So we're very pleased, but the main thing we're pleased about there is the extension, to have it confirmed. What we've done so far on Clontibret relates mainly to a central part of the deposit, and on that, as you know, we already have a 500,000 JORC resource. But it's very evident that the deposit is far, far larger than the part of it on which we've done the JORC resource. The JORC resource is probably on about 20% of the deposit, possibly less than that. But let's say 20%, and it's only down to 200, I think it's 200, just over 200 meters. So you're still really at a very shallow level as gold deposits go, and we've every reason to believe it goes much deeper. And we also know that not only does it extend to depth, but that it extends in every direction. And this particular drilling has confirmed that to the northeast, for example, it extends. And I'm quite sure it'll extend in other directions as well.
Yeah, we've all seen the Jaws movie, 1975 movie, where the famous phrase, "You're going to need a bigger boat." I think from the amount of cores, you're going to need a bigger core shed at this time, Richard.
That's already underway, but you're absolutely right. The core shed, which is a you've seen it yourself. It's a good core shed and well fitted out and quite extensive, and cutting office and so on beside it. We've already arranged for a second core shed, and hopefully that will be coming to use early in the new year, and certainly will be needed, because the pace, of course, of exploration will and has exponentially increased. We're talking in terms of drilling, but of course there's a lot more going on: deep overburden sampling, soil sampling, geophysics. There's a whole lot going on, which may not be as glamorous sounding as actually doing a trench or putting in a drill hole, but nonetheless is the sort of basic exploration which is required before you put in your drill hole and hopefully hit bedrock, golden bedrock.
So here we are. You've worked for something in the region of probably 30 years on this project. As you said, blood, sweat, tears gone into it. You're at the stage now, pinnacle, where you've got the joint venture there, and it's very good terms, as you say. But yet the share price, as you say, is deflated. It's sort of around probably almost all-time lows, 13.5p, 6 million market cap. Yeah. How deflated do you feel even though you're obviously jumping for joy inside in terms of what you've achieved, it doesn't feel like the market regales in that sense?
One could easily be very annoyed by it, and there are times that it is very annoying. There's no doubt about that. On the other hand, in some ways, it's highly almost amusing. And also, one has had, as I said, we've been in this business for some time. We've had the previous experience before at Galmoy in Ireland, in which, again, we had the information out there in the public eye, and our share price, if I remember correctly, was in or about 20p, and it stayed that way for a long, long time. And then one or two guys from Canada who could see the significance of it began to buy up. And then sometime later, the people in London began to buy. And finally, I'm sad to say, the local people suddenly began to realize what was on. And the price steadily went up, not a sudden shooting up, although it was pretty good, from 23p up over the 100, up over 200, up over 300, got to £7.5. Some people made a lot of money on it, particularly those early Canadians who got into it. And that was despite all the information was there, public view, anyone who cared to read it and see it. So it doesn't entirely surprise me, except, of course, that the potential for the area that we have now, that's a whole district that we have now. Galmoy was just one single mine.
Yeah.
So it's and on the other hand, we're now in a situation in which we have the money coming in. The money we absolutely require now is just the sort of thing to pay the ongoing costs. That's very different from a stage in which you're trying and it's been a tough market for the last while, trying in a tough market to raise money for exploration. We don't need to do that anymore unless we feel like doing something and possibly see something that's so low in value that we might look at it ourselves or that sort of thing.
Yeah, you're in a very unique position in that respect. A lot of these junior mining companies are worried about going to market now. Can you imagine having to go to market in this, in terms of capital raising? It's not an easy thing to do. So what do you think it needs now? Do you think, and looking at the wider market, do you think that the commodity companies and the sector will have its day again? Do you think that they think money's going to come into it in 2023?
Certainly, I think there will be a swing back. The obvious thing of the green economy means, in effect, that the mining industry is going to have to expand. There is an absolute requirement and a very large requirement. I don't think people have taken it on board fully. One or two government departments are beginning to do so, and some of the more astute mining operators. There's going to be a great opportunity for the mining industry over the coming years, if even a small percentage of the ambitions for the green economy are going to be achieved. You need a huge amount of copper, for example, of nickel, already the obvious requirement for lithium. So the mining market, I think, as a whole is going to go up. And I have no doubt whatsoever that gold, indeed, it's risen quite a bit over the last while as people realize it is always there as the resource of value if you have inflation or anything else. For a while there, I know the cryptocurrencies were bouncing up and down, but I think Mr. Buffa and his colleagues described them very well. Gold will still be there. It's been there for 4,000 years, and I'd say we're going to do very nicely out of the gold we have.
So tell me this just about Clontibret, because I'm intrigued. We visited Clontibret ourselves last May, and we saw them drilling the holes, which was a step out already from the JORC resource. Now, those results came out in October, I believe. So the next step out was from that position a further 300 meters or 340 meters?
Much further away from that, because the technical people have done a line of holes. But again, we're in a very different position even then. I know we already had the joint venture sort of coming underway, but I suppose to some extent we were still conditioned to be thinking in terms of situation when we could raise enough money to drill a couple of holes, and had to spend a great deal of time and hope and luck as well that they would come out as good holes. Now we're in a totally different position, and we can the joint venture can decide to drill as many holes as it likes and as many holes as it deems appropriate, not only just for the development of Clontibret and possibly a second mine. I think we're already beginning to think along those lines, but also decide what holes it will drill in relation to all the many other opportunities right across the gold district. So it's a totally different situation for us, a very nice situation indeed, I must say, and very exciting for the technical people, and obviously exciting for ourselves as well. We're looking at the likely financial rewards from it and how we're going to develop it. It's a different situation entirely from the early explorations stage, which was great fun and worked out very well indeed, as it has for us 2 or 3 times now. You still need luck, by the way. You can have all the thorough thinking and focused aims and all the rest of it. You still need a bit of luck, and we've been very fortunate that way. So
in terms of Clontibret, from the company's perspective, you did an overview to say that Clontibret and Clay Lake would have 8.8, I think it was, million ounces of contained gold. Now, that was only down to a certain level. I see that these last lot of holes came in and one actually went down to 350 meters, which was lower than I think you proposed on this 8.8 million ounces. And we still struck 1 meter at 0.4 grams, and even at 287 meters, 3.6 meters at 0.4 grams. So I suppose what I'm saying is, do these results justify those type of figures at Clay Lake? Not the 8.8, because I think not Clay Lake, sorry, Clontibret, because Clontibret was somewhere in the region of 2 to 3 million ounces, I think, of that overall. So do these justify that that's likely to be a JORC resource?
Well, I think that it's going to be considerably more than that. Those figures, as you rightly say, were based on the superficial soil depths down to 250 meters. I think was the actual depth that was used, and some speculation as to a bit deeper. But we were looking there at I think it was 8.8 million ounces in addition to the 500,000 that we had already a JORC resource on. So we were looking at over 9 million ounces at that stage, and nothing has happened since then to diminish those figures. And even at that stage, obviously, one wasn't taking into account the potential below 200 meters, which is very shallow in gold industry terms. And as you rightly say, even one of the reports, one of the intersections which we've just reported in the last few days, is confirming golden bedrock well below 300 meters. And I'm sure it goes far deeper than that. So it's a very happy situation to be in. We'd love to see the share price go up. Obviously, it's a ridiculous share price at the moment. You get very annoyed about it. On the other hand, we're in a very comfortable position. So, that's up to people. We're going to do well out of it, we hope, and the company's going to do well out of it. And we look forward very much. But we'll be sitting and deciding how we build on our success now, because it is a tremendous success. There are very few companies in the history of the mining industry which have discovered an entire new gold district. And even those who have then had the challenge of how do you develop it? How do you find the multi-millions that will be necessary? It's taken us a long time to do it, long time. But now we've done it. We have it. We've made the discovery. We have a joint venture partner, ample financial resources. Now, how do we build on this and get the maximum rewards from it? But we could even do that by just simply sitting back. We're certainly not going to sit back, but it's a very comfortable position to be in.
Okay, last question from me then. The all-in sustaining costs that were put in some of the figures that you produced previously, what do you anticipate that to be for the sake of argument in terms of Clontibret?
I think the costs are definitely going to go up. We've always taken a very conservative basis when we're looking at the figures that we have. For example, in previous figures, assumed that our working costs could be as high as $1,250 or even $1,300 per ounce, depending upon what just you're including. Many others would use rather lower figures than that. We're really conservative that way. We've also always been very conservative in our estimates in relation to the gold price. And I think one still has to be conservative, because the price of energy, which will be a major factor, has gone up, and a lot of other costs have gone up. So the sort of figures that we were looking at of maybe $1,250 per ounce all in, they could well go up by another 50 or 100, perhaps even $150. But we're nonetheless still in a very, very comfortable position with the gold price, anything above $1,500, $1,600, and I think it's well above that at the moment. It's around about, I think, the $1,900 at the moment, and the likelihood is it's probably going to go up, I would think, a bit more, but you never assume that. But where it is very, very, would be very, very comfortable for us indeed. We could take a considerably lower gold price and still be making a nice profit. and the fact that we have the probability of very considerable ounces again puts one in a very comfortable position.
Yeah, £400 or £500 or dollars an ounce profit, and you would retain anything from 25 to 42.5% of that. Yes, it would make quite a lot of money.
Some of the figures are quite big when you sit down and think about it.
Yeah, absolutely.
Well, on that note, just want to say thanks very much for your time, Professor.
You're welcome. Good to talk with you. And we'll have to think about at some stage, or perhaps coming over and doing another visit, or perhaps expanding on that. Because I think it's really only when you come over and see what's going on and see the sheer size of it that people begin to appreciate just what it is that we have.
I still have a piece of Clontibret on my desk here.
Excellent. Well, hold on to it.
Professor Conroy. And I keep telling my kids that these sparkly bits, there's little bits of gold inside these. And I actually showed these as a presentation to the school. I took them to a school and did a presentation and said, this is a rock that contains gold from Ireland. So yeah, we need a bit more of those children's belief, or those child's beliefs, because they were all absolutely fascinated that this had gold in it. And I think the market needs to take a bit of that and say, yes, there's gold in them the hills, and we need to get it out. And it's in Europe, and you know, a lot of these things need to be kept within the places that they are being found because of what's happened in the last 12 months. You know, it's not been good.
Good.
That's very true.
We wish you all the best, and we look forward to you updating the market in the near future, Professor Richard.
Good to talk with you. Thank you.
Yeah. So, anything else that's or anything that's piqued your interest this week on the markets, news-wise, or just global markets, I guess?
I felt it was a quiet week, really, to be honest. There wasn't huge amounts. There was a few ones that went off with big offers, as you said, and you've already mentioned those, I think. No, for me, I'm more looking forward, but let's look backwards first. You know, there was some news with IOG, and obviously they had a bit of a wet one, I think, is the best way to put it. And it fell off a cliff.
Disappointing rates, wasn't it? Disappointing update, wasn't it, from them? The lower than expected gas rates. I think there was
lower than expected gas rates because effectively, I think 80 or 90% of it was water. Yeah. So there was obviously water coming into the thing, and it meant no gas. And I think what's happened then is that one of the big institutional investors started to dump their stock because they'd had enough, because obviously I think the shares had come all the way down from 30 to 40p, down to 15, I think it was, or 16, and now they're sitting at 7.5p, which seems, considering they have got some production, is very cheap now. But at the same time, by all accounts, one of the IIs basically dropped 6 or 7% of the whole stock on the market.
I think someone said they've got 2.5 million shares remaining, and they're dumping them at about 500,000 a day. So by the end of sort of probably middle of next week, they potentially look out for a TR1. They could be out of that, they're saying there's going to be a bounce. But I think the other thing was that there was also said that the cleanup phase was at the Southwark A2 well was taking longer than anticipated as well, which obviously knocked confidence a bit further. But yeah, I think if they can address this gas rate and this water cut, then they should be good.
Yeah, I mean, I think they were. I mean, I'm not particularly technically savvy on this, but they were taking the line out to find out where the water was coming in, and then hopefully they can section that off, and then maybe the gas flows are going to be greater. I mean, if that happens and suddenly an RNS pops to say, you know, we've isolated the water and now we're only getting 10% water and 90% gas, and it's this rate, I mean, it's probably going to be 30 or 40p overnight. Yeah. So I mean, because I think everybody was expecting, if there was good results here, this was going to go like bananas.
Yeah, I mean, that's the thing with these oil and gas plays, isn't it? The you get, you know, and any bad news, whether it be a duster or disappointing well flow test rates, you get like a 50 to 60% drop on that news, which is exactly what happened to IOG on that day. But then on good news, you rarely see them move over 20, 30, 40%. Do you know what I mean? It's like, what is the trade-off there? Do you wait for the news and then just buy in for that, for you know, or do you hold them and you know, it's always been a bit of a trade-off for me, that one.
Yeah, in this market, it's very difficult, isn't it? And especially with the oil and gas side of things. So
yeah. So the other one that I had my eye, which has been absolutely brilliant in the past. This is a stock that became one of the COVID plays of 2020. It rose from pence into the pounds. That's Avacta. AVCT is a ticker. You probably know it very well. They obviously had a COVID test back in the day, one of the lateral flow tests. And I think they also had a PCR test, but certainly they were very much heavily involved in the whole COVID testing kit when it came out, a bit like Novasit were. But they basically provided a landmark update and positive progress in the ALS 6101 dose escalation phase 1 clinical trial this week. They're developing oncology therapies, and the current trial involving 19 people with metastatic solid tumors found Avacta's AVA 6000 provides significant benefits compared to other methods of chemotherapy. And their stock rose from about the pound mark up to 166, 168 this week. So that's been, and it's great to see, isn't it? All these these pharma stocks, when it goes right and they get the FDA approval, or they get trial results like that, there's no stopping them, is there really?
Yeah, no, they can go crazy, can't they? Because the potential to get volume in these type of things is massive.
Yeah,
you know,
and it also makes a difference. You know, you're investing in technologies there that are making a difference to people's health and livelihoods, aren't you? You know, that's the beauty of these is you really are. You know, funding. There's been some shockers. Angle has been one that's interesting, isn't it? You know, the Parsotics, they got their FDA approval. They went up to sort of like, I think, late 80s into the hundreds as well, into the pounds. And then they're sitting at 25p now. And you think, what has happened? What confidence has been knocked? Or what has the board done to knock confidence in investors to the point where it's not a buy at 25 when they've got the FDA approval for Parsotics? So it's a strange beast at times, isn't it, this market?
It's a strange world. Yeah, and we had some news on Galileo as well, didn't we, there in Shinganda? Do you want to talk a little bit about that? It was just updating the diamond drill results.
Yeah, there was the results, further drilling extends Shinganda copper gold project in Zambia. I think there was 9 angled diamond drill holes completed, as I mentioned, at Shinganda, totaled about 1,200 meters. Confirming a supergene copper gold mineralized Gossan zone containing malachite, chalcite, native copper, and associated gold mineralization. So some interesting results. 50 meters at 1.54%, 43 meters at 1%, 11 meters at 1% as well from the whole SHD 005, and 16 meters at 0.72%. So yeah, I guess it's just another one of those you know, long anticipated assay results that have come in from Shinganda, which was obviously is the copper gold project in the many a suite of projects and that Galileo has in their portfolio. So I mean, Colin seemed pretty upbeat there. Said it demonstrated significant potential as a copper gold exploration project with very encouraging intersection widths from drilling to date. They're going to continue to carry out pitting and trenching on additional nearby targets to demonstrate further potential within the license area as they pursue, obviously, their aim of drill testing several of these targets during the first half of 2023. So we're hoping to go and visit that if time permits, because obviously we've got quite a tight schedule on our Zambia trip, but hopefully we'll get a visit to Shinganda and see it firsthand. You excited about that trip? You're ready for it?
Yeah, absolutely. I've got the spray ready for the mosquitoes, and but it should be interesting. It really should. But one of the things we've learned as we've gone along doing this is obviously some of these terms are very, like what the hell does that mean type scenario. So you talk about a Gossan, and we're talking about a VMS and all of those things. So we started to realize that a VMS, I think, stands for volcanic mass. What's the S for? Sulfide. So effectively, at some point, the Earth has had a split, and stuff has rushed up through the Earth, and it's created these Gossans, if you like, which is mineralization of whatever, and maybe they contain gold and copper are the main two things, I think, and maybe not, but in most cases they do. And that is basically where the scenarios. And one of the reasons why I brought that up was because I was actually re-listening to one of the podcasts for eStar Resources on Friday, I think it was. And they're about to get results very shortly. And I think hopefully the market will start to build up to that. But they've got a fantastic proposition there with copper, with these GOSANs and VMSs. So it's just an interesting point that when people are starting to talk about all of these things, what do they actually mean? What do they mean in mining terms? You know, I remember when we went to Cyprus. Do you remember when we were standing on the banks and Martin was pointing out, look, do you see there's a GOSAN there, there's a GOSAN there, there's a GOSAN there. And, you know, it's just a pile of stuff, if you like, minerals.
Yeah. You wouldn't really notice it until someone points out and explains what it is. And you sort of thinking, what is he talking? And then you suddenly realize, and it's sort of, you spot it, don't you? It becomes apparent that he's talking about these black smokers or GOSANs that he mentioned them. But there's one other company I want to just quickly talk about that have had they've had a good run, certainly over the last year. Company called Codal Minerals, KOD or COD is the ticker. They have a market cap of 60 million, share price about 0.36 pence. They basically took a significant step forward in the development of their Bogoni lithium project after securing $117.5 million funding from Hainan Group. I think that's a Chinese company. Codal said the funding will see the mine through to production. 17.5 million tranche will be invested directly into Codal at 100% premium to the prior 10 days VWAP. And $100 million will be invested into a new subsidiary, Hainan Group, which will own 51% of the newly incorporated Codal Mining UK Limited. So it is showing here that these companies are getting these projects in place and actually getting funding in place from some majors.
Yep, absolutely. Things are happening, and I think ultimately when people start to really realize, I mean, we've seen copper tick up again this week. It's gone up about another 1% or so to 420s, I think, per pound. Gold has been sitting comfortably over $1,900 an ounce. And in other countries is going much higher than that, even in dollar terms, because basically it's seen as a safe haven in a lot of places. So, yeah, I think it's coming. It's coming. And, you know, the rate rises are probably going to start slowing down and stopping in the US in the next few months. And that's going to put pressure on the dollar again, I think, and then we're gonna see what happens. But I've been saying that for a long time, so we'll see.
Yeah, good. I don't think there's anything else really, is there? Just looking forward to the trip down to Indaba and catching up down there.
Yeah, absolutely. Speak to you next week, and let's see.
Have a good weekend.
Yeah, all the best.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.